All right, welcome to 2020. Things are starting off with a bang here. First day of trading was actually just a continuation, pretty good day, and now we're in the second day. And bombshell with the U.S. Military strike in Iraq, but targeting Iran military leader, a general actually, and it was one of the top generals. And Iran, they're not the kind of nation to just back down. So who knows what's going to happen? But it's definitely causing a spike in the oil patch. And I thought I'd talk about Whitecap today because it's good Canadian company, kind of like the whole sector, the whole Canadian energy sector, and energy in general has just been abysmal. But maybe it's time, and it's not just because of this, but it did, gives us a little extra to think about. Before I get into Whitecap, I want to show our report on both the energy sector in Canada and the US, and you'll see kind of a pattern emerging in the return on invested capital, or the cash flow IRR. I'm hoping you can see these charts. I think you'll be able to on screen. On Whitecap. Okay, so here's the whole pattern of it. Longer history than we showed in that other report, but very similar, right? You have good returns back in this area, and that was 2011. And then 2013, 2014, not so good, got really bad by 2016, but then you see it emerging again, and that's where you start to go, okay, things are pretty decent. And by the way, the valuation is really quite good because it's been beat up so badly. I mean, even if they just do this 5% return, that's all this scenario is, and it's saying it's worth $10, trading at about $5.58. And let me check for that is Canadian dollars. Okay, good. Okay, there's more. Dividend. I actually put this in our dividend portfolio. It's yielding 5.94%. Now, let's be real. This is not a typical dividend stock, right? They were paying a dividend. They wanted to keep it up. The stock came down. They kept the dividend going. And, you know, it's a dividend stock kind of by accident, right? Like, it's not a utility where they just, guaranteed dividend year in, year out, right? In fact, here's the dividend history. Back by about 2015, they decided we got to cut this dividend, right? That's what this chart essentially said. Boom. And, cut it way down and then kind of just kept it low. And I actually bumped it up a little bit. And then the chart below is actually a very similar chart. The blue is the dividend, so it's a trailing 4 quarters as opposed to quarterly on the top one here. And then the green is the actual cash flow. So as cash flow came down, they cut their dividend. Well, actually, cash flow's been pretty good. And it just kept the dividend low. They're only paying 21% of their cash flow out in that dividend. So that seems very sustainable, especially with better energy prices. As we said, returns are getting better. Cash flow's getting better. The dividend looks sustainable, and it's yielding about 5.94% at the moment. So, there's a lot of compelling reasons to take a look at Whitecap. Now, again, we got to be realistic. It's still it's a $2.2 billion market cap. They also have $2 billion in debt, so there's another risk. You got to think of what the risk level is what I'm trying to get to, and then how big a position you take. And it's usually the bigger the risk, the smaller the position. Just simple. So this is at least medium risk, maybe even high risk. Let's call it medium to high. But you can take if you normally have 5% of your portfolio is a position, maybe cut this in half. Normally your positions are 4%, cut it to 2%. I think it's a very reasonable idea. If we get a little bit more turmoil in the Middle East, and not that I want turmoil, but because if we don't get turmoil, I'll just go to other stuff. But if there is the turmoil, we got to be investors, we got to be smart, we got to go for where the capital is going to flow and where money flows are going to go, right? And Whitecap is fairly compelling in that regard. There you go. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.